One trend this earnings season has been stocks moving a great deal, more than many have seen for most of 2021. When the underlying company reports its financial results, Yahoo Finance's Jared Blikre has been crunching the numbers for us on this and is here with us now. Jared, take it away.
Yeah, some pretty interesting findings here that are not intuitive. The bottom line is that we have seen a number of outsized moves in reaction to earnings, and actually I have quite a few of them up on the Wi-Fi Interactive right now. This is a heat map that shows some of the big earnings winners and losers over the last month, and this is the trailing 1 month results. So you can see PayPal down 20% over the trailing month, Moderna in the upper right down 27%, AMD in the center up 31%. But Goldman Sachs crunched the numbers too, and this data really isn't that easy to come by. And what they found was that in prior years, it would be more common for a company to say beat by one standard deviation of analyst estimates. However, that's not happening this year. But the bottom line why that's not happening is because the analyst estimates are so wide, so varied, and that's because there's so much uncertainty right now. As these analyst earnings come down, as there's more certainty, as companies issue more guidance, I think that's going to change. But let's take a look at what the earnings season has brought some of these companies here. Here's PayPal. Excuse me. And this is a 3-year chart. You can see here's that big downdraft we got a week or two ago in reaction to its earnings, but it looks like it may have found support at this technical level, which used to be resistance. So always interesting to see where the big moves terminate. Could it go lower? Absolutely. It might go down and test this area here. But for now, this is acting as support. Now let's take an opposite situation. Here's Qualcomm. Again, a 3-year chart off of its tremendous earnings beat. And by the way, here's a company that's really managing its supply chain as well. It's right back up to this potential resistance area. These were the highs from earlier in 2021. And then let's take a look at Moderna. This is one of the high flyers from earlier in the year and just one of the worst performers over the last 6 months. At one point, I'm not sure if it's still up the most of any S&P 500 stock this year, but 128%, nothing to sneeze at, but nevertheless, you can see some of the damage done. Here's that first drop, and then the second one right into this potential support area that used to be resistance. So again, technicals really guiding the way here. Also, let's check one more stock. This is Avis Budget Group over the last month here. There we go. There's that huge spike up. Admittedly, this is also potentially a meme stock, but nevertheless, you see what can happen in the opposite direction. Now, back to that Goldman Sachs research report. I do have that in the Wi-Fi Interactive, and I just want to read some of the findings here. So it's early, that's what they're saying, but 65% of companies have reported beat street-wide estimates by at least one standard deviation. And that's versus 46% historical and a record 72% last year. Now, this certainly is a better start than expected. Only 10% of companies have missed versus 14% average. Also a positive development that unlike last quarter beats, they are outperforming the S&P 500 by 76 basis points on the session following that earnings report versus historical average of 102 basis points. And 76 basis points, that means if a stock rose 1.75% and the S&P 500 only rose 1%, that would be the beat by which the average stock is beating this quarter. But again, a little bit lower just because of the wide analyst estimates, guys.
I think the takeaway here, Jared, if you're a CEO, do not miss on your earnings. Just don't do it, because in this environment, your stock might get absolutely obliterated. Jared Blikre, thanks so much.